We have to recognize why we're in business, and we're in business first to make money. If we make money, we can share it with you. We had a labor strike where we stopped producing for 46 moments, got a death threat out of it. One of the union executive members comes out and says, "Do you know who this guy is?" I'm thinking, let me see, I've got a death threat. Are they going to shoot me? Anybody who was helping me was also a target. And the world knew that we had so much gold in Red Lake, and it created a gold rush. I hired some former undercover police. You guys are going to go up to Red Lake and tell them about the $35,000 bounty I'm putting on the head of the person who wrote that letter.
Hi, this is Eric Mashinsky. I'm the editor of goldinvestmentletter.com and CEO of Phenom Ventures. And sitting in today, we're going to be talking to one of the people that I look up to the most as an operator, as a businessman, as an investor in the mining and gold space in the world, Rob McEwen. I wanted to get Rob on to basically not only do the normal, hubbub of what do you think the gold price is going to go to and, talking about geopolitics or this or that, but we want to get into a little bit of his story. From the tidbits I've picked up on over the years, getting to know Rob, there is a lot of fascinating stuff that has occurred with this man's life and with his story. So I am absolutely over the moon to be talking to Rob McEwen from McEwen Mining. Good morning. Eric Mashinsky, goldinvestmentletter.com, sitting in here as a part of our How to Invest and Navigating the Minefield series. This is part of the interview section of what we've been doing over this course of 6 months, where I've taken folks in the space that I look up to and that have really made a mark in the industry, and dig a little bit into their story and into their mindset and what they're doing today. So today I have the pleasure of welcoming Rob McEwen out of Toronto. Looks a little gray there behind you, Rob, but Rob McEwen from McEwen Mining. How are you?
Excellent. Thank you, Eric.
How did you get into this area? Maybe give us a little background on what brought you into the mining sector initially.
Well, the path wasn't a straight line. Like most people, we traveled there were many zigs and zags in the course. I guess it started at home at the dining room table. And my father was in the investment industry and he talked about stocks. One of my favorite games was Monopoly. He had me charting stocks when I was 10 and 11. My first investment came at 12, and it probably set me on the wrong course because I made 9 times on my money in a short period of time, and I thought, wow, this is the stock market. It's so easy. Took quite a while to repeat that performance. And so an economics undergrad, worked in the investment industry for 3 years, went back to school, did an MBA, came out and worked with Merrill Lynch in Toronto, going down to New York frequently. Then after 2 years there went, my father had a brokerage firm that I ended up buying, and he had focused since the mid-60s on gold and largely South African gold mining shares. So there's always stories about the role of gold protecting one's wealth, governments debasing currencies, and so research, sales, portfolio management, a little bit of investment banking along the way.
Were there any particular people that were around you or any particular person and or moment? Where did you learn this? Who was your mentor? Where did you gather this information to be able to do it?
I suppose initially it was my father. Then there was an uncle of mine who I was very close with, and he shared some office space with me for a while. He had been the president of Burns Brothers, which became Burns Fry, which was bought by BMO. So Nesbitt Burns. He was a governor of the Ontario Securities Commission, also on the Toronto Stock Exchange Board. And it was all about him. He would invest, make an initial investment in a company of a reasonable size, and then when he got comfortable with management, he'd buy more, and he was an advisor to Spar Aerospace and a number of other conglomerates. So we would speak a lot. The fellow I worked with at Merrill, Ian Delaney, he was head of the institutional department and then head of retail. He was on Don Regan's advisory board for Merrill International. And then it was just observing the industry and saying, well, what's the investor looking for? I was on a board of a REIT, and I remember at an annual meeting talking to a number of the unit holders, and it came across loud and clear that they really liked dividends. I'd always focused on capital gains, and I tried it out on my mother one time. I said, you should be looking for capital gains over time. She said, Rob, I really like dividends. They're easy to deal with. So I said, all right, well, we should be paying a dividend. And after 18 years in the investment industry, I took a closed-end investment company that I was running and jumped into a hostile takeover battle as a white knight. And I believed, at the time, the closed-end fund owned gold bullion and gold mining shares, and it was a period when gold was out of favor. It was selling at a 50% discount to its net asset value. And at the time, gold shares were some were trading at 2 to 3 times NAV. And I thought, maybe if I jump in this takeover battle and take over these mining companies, I could move from a 50% discount to a 3x multiple. So jumped into the takeover battle. There was the hostile went legal. We had to go to court. Fortunately, we won, and I ended up buying control of 2 mining companies, Dickinson Mines and Wharf Resources. Dickinson Mine had a mine in northern Ontario that was high cost. It looked like it was near the end of its life, but it was right next door to Placer Dome's rich Campbell mine. And then it had 2 industrial mineral operations and a 36% interest in a mine in South Dakota, gold mine. And so over the course of, I stepped in as the CEO of the 2 mining companies after about 6 months, because I at first had thought I'll let the guys running the company continue, and when I saw how they were going to run it, I thought it was time for a change. So within a year, I changed all the senior management, stepped in as a CEO, and over the next 8 years, took 5 companies and compressed them into one to create Goldcorp, Inc. And so the mine that looked like it was going to close, I thought it had not been adequately explored. Put $10 million into an exploration program after getting rid of all of its debt. And we, a mile below surface, we hit some very high-grade gold. My head of exploration came along and said, well, you might like this, Rob. We've got 9 drill holes, and the average grade is 9 ounces per ton, and the average width is 8 feet. And so I went, I do like that. How about, do you need any more money? I'll give you another 10 million right away if you can keep finding that. And the stock just took off like a rocket. It was 30 times the grade we were currently mining. We kept exploring. That was in, I think, March of...
the 80s, right?
Yeah, late 80s, 86.
Okay.
We had a laborized workforce. The United Steelworkers of America were the union there. They'd been there for 35, 40 years. And they decided they wanted to go on strike. because I said, look, we've got to change this. At the time, we were producing gold at $360 an ounce, which was very close to the price of gold at the time. The reserves were short, and I said, look, we've got to have more flexibility in the workplace, and let's change the collective agreement. Well, I said let's change. They didn't want to change it at all. We ended up going through, had a labor strike where we stopped producing for 46 months.
Wow.
Got a death threat out of it.
Jeez.
Anyhow, the union came back. Every time we went back to the table to negotiate wages, I offered less than I offered the time before. They thought that was a little unusual. Normally, management comes up. Anyhow, at the end of the day, they decided to leave the mine, and what I would refer to as decertified. The mine became union-free after 35 or 40 years. And it was one of the first times that happened anywhere in North America.
Wow.
So, and we went from producing 50,000 ounces a year to 500,000 ounces a year. And our cost of production went from $360 an ounce to $60 an ounce.
Wow.
So there was a 60-fold change in the economics of the mine. And then I looked at that and I said, well, you know, our largest expense is corporate tax. How do we slow that down? So we started withholding our production from sale. And it started off withholding 10%, and then I got it up to 30% of the gold we produced we didn't sell. And the auditors had a hard time thinking about this. Well, you're not selling it. I said, yes, we don't have to pay any tax on it. We could borrow against it, and we increased our financial assets available by the reciprocal of the tax rate. So you could borrow money on a pre-tax basis, basically, of your gold holdings. So we ended up holding, we amassed holdings in the vaults of 200,000 ounces of gold. So, and then we were started with a dividend once a year, then quarterly, then we started paying monthly. I decided the computer systems are out there that we could give back to our shareholders what I consider the economic rent while they're waiting for growth in the capital.
And was that then in the 90s, early
Yes.
90s, or
All through the 90s.
all
Yeah.
through the 90s? And that was not necessarily a great environment for gold stocks.
No, but we had quite a high multiple in the market because we were low cost, we didn't have any debt, and we paid a dividend.
So you're talking about Red Lake, correct?
Yes.
Yes. So I wasn't aware of it, but it sounds like Red Lake was already in production before you did the underground and had
Yes.
every. And so.
It went into production in 1949.
Oh wow.
And interestingly, I mean, in Red Lake, there'd been a gold rush in the 20s after the First World War. And then after the Second World War, there was another gold rush. And our discovery created the third gold rush. But there was a family that controlled the Dickinson mine, or what we ended up calling the Red Lake mine. And a fellow by the name of Arthur White, and he had owned the Campbell mine next door and the what became the Dickinson mine, and he didn't have enough money. There weren't mines at the time. He owned the properties, and to develop them, he only had enough money to develop one. So he took a coin out of his pocket and flipped it and said, heads, okay, I'm selling the Campbell mine. And the Campbell mine turned out to be 3 times the size of the Red Lake mine before I got involved. It had produced 9 million ounces, and Red Lake had produced 3 million ounces.
Wow.
The Campbell mine was non-union. The one that I bought into was unionized. And when you mentioned it talked about the contest that we had, the Goldcorp Challenge, where we took all of our geological data, put it up on the web, and asked the world to tell us where we'd find the next 6 million ounces of gold in our mine. So the 6 million ounce number came from the difference between what Campbell Mine had produced and what we'd produced. And when we made the discovery, well, I guess when I stepped into the mining industry, rather than looking at it through the eyes of an analyst or an investor, I stepped in to be CEO, and well, I had a different perspective. Now it was as an operator. And a few things, I mean, the market, if you don't like a story, you sell it, you walk away, and you either have a profit or a loss, but it's gone. Your problem's gone.
Right.
When you're an operator, they don't go away that quickly. It was like stepping into a vat of quick-drying cement, and then you couldn't move your feet, and you had to deal with this issue on a much longer term. So I thought this mine that I'd bought looked rather primitive in terms of the technology, and I enrolled in a course at MIT that was put on by the Young Presidents Organization, and we had the dean of the business school, dean of computers, and engineering, and we had made this discovery, and I went going to MIT for this course to learn about information technology, and I thought we could employ some of that in the mining industry. But on the second day, right after lunch, sitting in the classroom, they started talking about Linux and open source code, and I went, hey, wait a minute. That's how we're going to talk to the rest of the world about our discovery and try to figure out how big it will be, how long it will last. And I rushed back home saying, here, we're going to take all our geological data, throw it up on the web, and ask the world, tell us where we could find the next 6 million ounces in our mine, and we'll offer $500,000 in prize money. So it was one of the very early examples of incentivized crowdsourcing.
Right. Absolutely. That was an absolute innovative idea that you must have been well into the 90s by now, I'm assuming, just to be able to do that online.
Yes. We launched it in 1999 and announced the winners in 2000. We launched it at the annual mining conference in Toronto, the Prospectors and Developers annual convention in 99, and then we showcased all the winners and all the winning submissions at the show the next year in 2000.
Before we get to the end of the Goldcorp story where you divested it and moved on, I mean, you're talking about, if my numbers and memory are correct, when you had gotten into the fund early in the 80s, it was something around the neighborhood of around a $50 million market capitalization, which ended up turning into somewhere in the $8 billion market value. Correct, right? So you're talking about a tremendous amount of wealth creation. And I don't know, what impact do you think that idea of bringing in, where do we find the next 6 million ounces, that actually ended up helping you discover this massive high grade and expand this project if you look at from 50 million to 8 billion, how much of it was generated or in the ballpark from just that idea alone? Did it take you from 4 billion to 8 billion, or from 2 to something, or a part of that?
We weren't a large gold producer, and we weren't that well known. The name had been around a long time, but it was small. And when we launched the contest, I mean, there were 1,500 people from 50 countries took down the database we provided for free over the web. We suddenly became a name that a lot of people were aware of around the world. And I guess I'd been at a dinner, a mining dinner, and of CEOs, and I guess earlier on, and I thought, these people are asking me what we're up to, and I tell them we have this high-grade discovery, and they go, oh, I never heard of it. And I thought, let me see. These guys are in Canada. They're heading up mining companies. They haven't heard about it. It's a sure bet that a lot of people in America and over in Australia and Europe probably haven't heard about it at all. So when we did the Goldcorp challenge, all of a sudden, this was considered heresy in the industry to give
Yeah.
away your database without a confidentiality agreement. And so our name spread all around the world, and the awareness of how rich the ore body was, how low cost it was, um, how we didn't have any debt, paying a dividend, and they went, this is a pretty good company to own. Um, and so, yes, it would have accelerated the knowledge awareness in the company.
Right, but you actually had input from, I don't know how you broke up the prize money, but you had literally what, maybe a handful or two of people that provided data that was very valuable.
Oh, extremely valuable. We made it like a competition. So there were going to be 25 semifinalists, and then from that, there'd be 3 finalists. So, and I wanted to prolong this experience. So we selected 25 semifinalists, and we had a panel of 5 judges from South Africa, Australia, Canada, the United States, Europe, Great Britain. And their instructions: look for the most innovative ideas in this group, and we had it filtered by some people at one of the mining universities. And each judge had their own groups of winners, and then we had them all together and they came to a final number. But it was fascinating to watch. There were people who came in with very advanced mathematical calculations to say where this goal could be. The winning submission was it was computer graphics that I'd never seen in the industry before.
Wow.
In fact, when I opened it up, I almost fell out of my chair. I went, where did this come from? This is amazing. And when I sort of picked myself up, I said, there's some institutions in Toronto that have heard this story for a number of years and they haven't bought. I've got to talk to them. So I got them on the phone and I said, give me 15 minutes of your time. And I went out one Friday afternoon, talked to these 3 separate groups, and before the day was out, they'd bought 15 million shares of the company.
Wow.
And it was just it was the visual. You could just see, okay, there's the ore body up here, and it comes down to there, and there's a big pile of it down there. Oh, this is going to be a big mine. And that created an awareness that, it became viral. It just took off.
Yeah, and so it sounds like your retail broker instincts kicked in there to say, I got to call some of my people, and I've got some new information to spark some enthusiasm. So we gave you tons of ammunition. What I want to do is just take one step back about you as the human being. You're always such a nice person, you don't come across as you're never aggressive or anything like that. But like, what was inside of you at the time with the unions to go to battle with the unions where you're getting death threats? Like, I mean, that's some pretty shrewd stuff. Where does that come from?
Well, the union and I were opposed because I thought the system we were working under wasn't viable long term. So we had to change the relationship. I wanted to give more flexibility to the workforce in terms of skills. So cross-training, the union didn't like that. I wanted to change some of the gaps in our workflow. I wanted a different attitude, maybe some pride. So there's a collective agreement, and, well, I tore it up, and they said, we took 40 years to build this collective agreement. I said, well, it's not working. We have to recognize why we're in business, and we're in business first to make money. If we make money, we can share it with you. But if we're not making money and this mine closes in a couple of years, because it looked like it could, because our costs were going up and the gold price was low, you won't have a job. Well, that logic didn't seem to work with them.
Right.
And then death threat came along, um, and I looked at it. We had just done a bought deal with RBC Dominion Securities. Uh, I just signed it, and then in came a letter on a fax from the mine site, and it said, addressed to me, and it said, if you want blood, we'll give you blood. You can't break us. And at the bottom it just said, remember Giant Yellowknife, and that was a mine in northern Canada. The same union was there. They planted a bomb in the mine and killed 9 people as a result. And that was fairly fresh in everyone's memory. And I thought, they said anybody who was helping me was also a target. And I said, here we are in a country where it's illegal to make death threats. And they're threatening me, but they're also threatening anybody who works with me. And I said, that's intolerable. So I hired some former undercover police that they'd been in undercover in drug squads and doing other things, and they'd set up their own business. And I said, all right, you guys are going to go up to Red Lake and knock on every door and tell them about the $35,000 bounty I'm putting on the head of the person who wrote that letter. And then I called up Dominion Securities and spoke to their chairman, Tony Fell, and said, Tony, you just gave me a bought deal the other day, and I'm going to do something that might get some press, and it might not our stock might not perform well after that. So I'm going to give you 24 hours to think about withdrawing your offer.
Wow.
And he said, okay, I'll think about that. He came back the next morning. Rob, I'll take you up on your offer. Bought deal's off the table.
No kidding.
I said, fine. We'll look at a deal later on. He came back a week later and said, how about we do a marketed deal? And I said, Tony, trying to do a marketed deal after you've just pulled a bought deal isn't going to work. Anyhow, 6 months later, we did a financing at 3 times higher price than what we were going to do. So that was sort of the strike. I do recall when that strike was on, I had all the directors up in the community one summer. And the strike was on. I asked the manager to drive me by the front gate. And he said, no, I don't want to do that. I got a new pickup truck. They'll probably throw stones at it, chip the paint. So we're having a meal at a restaurant. It's a small town. There's 2 mines in it, Campbell Mine and our own. The Campbell Mine, they'd put up a new head frame a couple of years earlier. At about 10:30 at night, we left dinner, and I said, it's a nice warm night. I'm going to go walk down to the mine, see the picket line. I said, see that head frame there? We're going to build one like that one day. And I'm walking down. It's a nice balmy summer night, and I'm thinking, let me see, I've got a death threat. Are they going to shoot me? No. Are they going to beat me up and leave me in a ditch? Unlikely. Are they going to yell at me? Probably. So the next day, we were holding a meeting for all the members of the union and their partners and spouses, and just to explain what we were trying to do, because the message was being blocked by the union. So I thought I'd go down to the picket line and just talk to some of the guys and see what they're thinking. So I get down to the picket line. It's night. They've got their bonfire going. There's a trailer there. And I say, hi. And they look, hi. One of the union executive members comes out and says, do you know who this guy is? Pointing to me. And I said, well, I'm the guy who has you on strike. And they went, well, what are you doing here? I said, I just want to talk. And they, well, do you want a Coke? And I said, sure. And for 2 hours, we had a conversation, swatting mosquitoes and just talking about all manner of things about the mine. And I was asking what they didn't like, what they liked, and how we might change it. And the next day we have this large meeting, and the union's trying to stop people coming in. They have video camera at the top and all that. But it put the union on their heels. And it was just about trying to change it. So then, I guess 6 months later, the union president called me up and said, could we sit down and have a conversation, just the two of us? I said, sure. I said, this has been a horrible strike. I said, what do you mean? Well, we've been spending $1 million a year in strike pay. And I said, but you've been wrecking our equipment. You've been blocking our progress. He said, yeah. We'll take your last offer, because every time, I mentioned earlier, every time I went back to the table and our union negotiators went back to the table, labor negotiators, we offered less money than we had offered before. And he said, all right, we'll take your last offer. And then he said, I don't think we're going to have a good relationship going forward. We're going to leave. I said, what do you mean leave? He said, your mine will no longer be a union mine. I went, okay, I'm not going to say anything, because I've been in front of the labor board so many times. The labor board was very sympathetic to the union. And so I just thought, maybe this guy has a tape recorder on him, a wire. In front of the labor board, and they're going to play this back and say, how could you do that? So he said, here's my home phone number. Call me tonight if you'd like to meet tomorrow. I'll come to your office with our labor lawyer, and we can close this all off. So as soon as we finish our meeting, I call up my labor negotiator and labor lawyer and say, this is what I've just been told. And they said, impossible. I said, all right, come to the office at 9 o'clock tomorrow, and you'll get the story firsthand. And so the union president, his lawyer comes in, my negotiator and labor lawyer come in, sit down, and I said, all right, Harry is the name of the president of the union. Harry, will you tell these two guys what you told me? And he said, and he told them, and they both looked at me after Harry finished, and I said, we're going in the next room. And they said, what do you want to do? And I looked at my watch, 5 minutes. I want a signed agreement and them out of the office. And we had a signed agreement. So I said, as Harry was leaving, I went, Harry, how are you going to talk to the union about this? He said, well, the executive. He said, well, I'm going to go up and tell them that if they don't accept this offer, this is the best offer they're going to get, and if they don't accept it, there's no more strike pay. I said, well, I'm glad you're saying that, not me. So he went up there, and it was like hitting a hornet's nest. These guys going, you've had us out here freezing our asses off for almost 4 years, and you're just going to leave us high and dry? And he said, yep. He said, we're going to sue you. We're going to sue Philadelphia, the head office of the union. Rah, 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 rah. And all of a sudden, we were looking like a better group. The clincher was, though, I said, part of our negotiation was, giving everybody who went on strike options, 15,000 options. So I wanted to give them a financial incentive not to try to damage or harm the operation. So they had an economic interest. Second, I said, everybody has to go through attitude adjustment training. I said, and I only take back the ones that have gone through our course of thinking of the world the way we think about it. So of the 180 people that went out on strike, we took back 60.
Okay.
And then said, this is what you have to be like if you want to come and work for us. So with respect to the death threat and the bounty, 6 people left town in the first week after we put the bounty up. We set up a confidential line and said, you can call in here, and if you get the reward, it'll go into your bank and no one will know about it. But I was so offended that someone was threatening other people's lives. I went around and met with all the religious leaders in the community and heard some really horrible stories, cruel treatment to even children. Because because it really divided the community. Uh, and it was so, once the strike was over, it was like spring had arrived. All of a sudden, the houses that hadn't been painted or the yards that hadn't been kept were painted. There were flowers in the gardens. There was a new truck or a boat or a snow machine. Um, and because this coincided with our goldcorp challenge, um, and the world knew that we had so much gold in Red Lake, and it created a gold rush. So all of a sudden, the people that weren't working at our place were able to get jobs. There were about, I don't know, 10 or 15 companies arrived on the doorsteps of Red Lake saying, we want ground around here to explore. Um, so it was, I thought, a good finish to what was a difficult period for a lot of people.
Substantially better, and congratulations on that. Frankly, I know it's been a while, but that's a story where it sounds like capitalism, free market, actual greasing of the wheels turned into a better situation for most everyone versus this grip of control by a central figure who may have some other motives as well, right? In the union.
I mean, the union, they'd have a very outspoken negotiator. Um, his language wasn't civil. I just said, look, I can't talk to you if you keep swearing like this. Every other word is a swear word. And he said, well, you keep 2 sets of books. And I went, this was in front of all of the workforce. And I said, look, if you think we keep 2 sets of books, if we did, I'd be in jail because we're listed on New York and Toronto, and that's not permitted. But if you believe we keep 2 sets of books, I want you to go out and hire an accountant, someone who's qualified, not just a bookkeeper, and we'll give him full access to all of our accounts. And when he's finished his study, the union guy, myself, and this accountant will be in front of this same group of people and telling everybody what he found. Then we went to a smaller meeting, and I said, when do you want to hire that accountant? And it's not important right now. We have to talk about something else. But it's all about these smoke screens that are created, and people look at them and they go, oh, this is terrible.
Right.
And I said, you had to put a grid onto it and divide it up into little cubes and squeeze each one of those cubes. And you said, there's nothing in it. There's nothing in that one. There's nothing in that one. And you're just looking at the substance, and can you simplify a statement so it's more clearly understood? And I guess that was the other thing about mining. Mining engineers, mining geologists, they have their own language. And very few people went through geology or mine engineering. So that vocabulary is only shared by a very few people. And I found what I had to do was act as a translator and try to get our geologists and our engineers communicating in a way that investors could understand quickly what they were talking about. And
Right.
I guess that's the same in dealing with the union, just trying to simplify the economics of the business, the mechanics of the business, and what we're trying to achieve. I am proud that there were a lot of people that came away financially independent
Right.
from that exercise. And if you can give people that financial independence and that liberty to choose where they want to work and how they want to work, I consider that quite a gift.
Those 15,000 stock options, I think, is such a key to the piece of the pie. I mean, I'm having a moment here personally where I just realized that I come from a place called Cudahy, Wisconsin, and the actual theme of the town on all the signs is generations of pride. And you had mentioned the word pride before, but that town is a blue-collar town. My father, my uncles, my grandfathers, all machinists, working in a factory. And barely getting by and prolific alcoholism and all kinds of these things. And, so you've got the pride from that the unions will feed into that you've got to have. But we also have pride on any end. It's just a vantage point. It's just a vantage point of like what is best for everybody. It doesn't have to be pure vitriol for anybody in these cases. So that's a very interesting walkthrough. And then I just wonder, when you mentioned pulling the bought deal with RBC or RBC giving them that option, your stock valuation tripled in a short period of time for the next raise. What was the cause, or what were the factors, do you think, that caused the valuation increase during that timeline? Was there something you could point to?
Oh, we continued the exploration and still finding more gold. I mean, it was a treasure box down there.
Okay.
And I think knowledge of the operation. We were raising the money to, because when they were on strike, I had the whole process plant torn down. It was an old operations from 49. It had been added on to. It was very inefficient. And we put a new shaft in, we upgraded the mill, wired the underground with fiber optic, and it was becoming a state of the art. So they saw it collapsed and then a new one coming up. I guess the strike was ending around then. We had a limestone operation on the east coast of Canada that served the northeast states and eastern Canada. Sold it, and we were able to build the plant without having to raise much money externally. So it was just, we had a progression that the company's fortunes were improving, and we didn't have to access the market as much.
That's big. That's big. That's fantastic. And maybe just to fast forward a little bit through, because there's another whole stage here in Saga. I hadn't even come across, I wasn't even in the business at that time yet, in terms of the gold mining stuff. I was in the business, but capital markets and advisory. But so fast forward then to, when was the time when you divested Goldcorp? What did that look like financially for shareholders during that whole, couple of decade period or so, in terms of returns, and then also for yourself? And then what was the next step?
We got a robbery. There was a flood in Nevada in the high desert. So that doesn't make sense. Then we had another group that drilled into a closed-off underground working and flooded one half of the mine. And unfortunately, we didn't make guidance, and the market does what it always does when you miss guidance. It was very painful. We went up, and then we went down, and then we stayed down. And now it's turned around.